Sole trader versus limited company, which is right for your business? Starting a business is a big step which involves making numerous decisions. One of the first questions that you possibly face is whether you should keep it simple and register as a sole trader, or would forming a limited company be a smarter move? It's a choice that can shape how your business grows and operates, and it's one that you need to get right. In this video, we'll break it down so you can make the right choice and in a way that's easy to follow. We'll talk about the pros and cons of each option, how they might compare, and what might work best for your goals. So stick around, because by the end of the video, you should know what path works best for your business. But before we get into that, welcome to the channel. Welcome to the channel Open Nursery with myself, Kurt Liania, where I support you to open, run and grow your own nursery. If this is your first time here, make sure you subscribe, because I post lots of videos all helping you to open your own nursery, from whether open nursery is worth it to understanding how fees are charged and the impact of government funding. So no matter what stage you're at and whatever your childcare goals are, there's lots of videos here on the channel to help you. But let's dive into why we're here, whether you should choose sole trader versus limited company. We'll start with a simpler option, which is a sole trader. This is generally the go-to option for many freelancers, small business owners, or anyone dipping their toe into entrepreneurship. When you register as a sole trader, you and your business are the same in the eyes of the law. You make the decisions, you take the profits, and you handle the responsibilities. Setting up as a sole trader is quick and easy. You simply register with HMRC, track your income and expenses, and file a tax return each year. There's no need for complex paperwork, hefty startup costs, which is why it's a popular choice. But one thing you need to know is that as a sole trader, you're personally responsible for all of your business debts. This means that if things go wrong, your personal assets like your home, your savings could all be at risk. It's a big responsibility and it's something to think carefully about. On the other side though, all the profits after you've paid your tax are yours. There's no shareholders, no partners, just you. Plus, as a sole trader, you don't need to publicly publish your financial accounts, so your business stays private. For many, this freedom and simplicity are what make being a sole trader so appealing. Now let's talk about limited companies. Unlike sole traders, limited companies are a separate entity. So what does this mean? It means your business stands on its own. If things go wrong in the business, your personal assets are protected. That's a huge advantage, especially with businesses that have greater risks. Though setting up a limited company does take a little bit more effort. You need to register with Companies House, file annual accounts and keep detailed records. It's more work, but it also comes with benefits. For starters, with a limited company, you can pay less tax. Instead of personal income tax, you'll pay corporation tax, which can be lower. You can also pay yourself a mix of salary and dividends, which can be more tax efficient. There's another bonus: credibility. Having limited after your business name can make your business look more professional and established. Clients and investors often trust limited companies more, which can open the door for bigger opportunities. And if you ever need to raise funds for your business, you can sell shares for them. It's a structure built for growth. So what are some advantages of setting up as a sole trader? I've touched on some of these already. So being a sole trader is often one of the first choice for many entrepreneurs because of its simplicity and straightforwardness. One of its biggest appeals is how easy it is to set up. You don't need to deal with complicated paperwork or legal hurdles. All you have to do is register with HMRC, keep a record of your income and expenses, and submit a self-assessment tax return each year. This simplicity helps save time and effort, allowing you to focus more on running your business. Control is another significant advantage. As a sole trader, you are the boss, completely and unquestionably. You decide how your business operates, which products or services to offer, and how to spend your earnings. There's no one else to answer to, and no board meetings or shareholder approvals to worry about. This freedom allows you to adapt quickly to the market and explore opportunities without delay. Financially, being a sole trader has its perks too. After paying your taxes, all the profit belongs to you. There's no need to share earnings with shareholders or partners, which can be especially rewarding when your business is doing well. Plus, sole traders don't have to publish their financial accounts publicly, so your earnings and expenses remain private. For those who value discretion, this is a significant benefit. Lastly, the flexibility of being a sole trader is hard to beat. You can experiment with new ideas, pivot your business model, or even scale down your operations if needed, all without going through layers of bureaucracy. This agility can be invaluable, especially in today's fast-changing business environment. Whilst the simplicity of being a sole trader is appealing, it does come with its challenges. The most significant drawback is the unlimited liability. Since there's no legal distinction connection between you and your business, you are personally responsible for all its debts and obligations. If your business faces financial troubles, your personal assets like your home, your car, or your savings could all be at risk. This is a heavy burden to carry, especially with businesses with high costs or unpredictable revenues. Fortunately, the nursery field doesn't have unpredictable revenues, but you can have high costs within it. Funding for a sole trader can also be an issue. Sole traders often find it harder to secure loans or attract investors because financial institutions see them as less stable compared to limited companies. This can limit your ability to grow your business or invest in new opportunities. Expanding operations, buying equipment, or hiring staff can be more difficult without the access to additional funds. Another issue is the perception. Some clients and companies prefer to work with limited companies, seeing them as more professional and established. While it isn't always true, it can be a barrier if you're aiming to land a big contract or partnership. The sole trader structure might unintentionally signal that your business is smaller or less equipped to handle large-scale projects. Work-life balance is another area where sole traders can struggle. Since you're running the show on your own, all responsibilities fall on your shoulders, from marketing and customer service to accounting and logistics. It's all on you. This can lead to long hours, burnout, and little time for personal life, especially during the early stages of your business. Lastly, scaling up as a sole trader can be tricky. Whilst it's great for small businesses or solo ventures, managing a growing business on your own can quickly become overwhelming. At some point, the lack of additional support or infrastructure might push you to consider switching to a different business structure. So let's move on to limited companies. For them, there are a lot of advantages. One of the biggest advantages of forming a limited company is the protection it offers. Since a limited company is a separate legal entity, your personal assets are generally protected. If the company runs into financial trouble, creditors can only claim the assets owned by the business, not your personal belongings like your home or savings. This sense of security allows you to take calculated risks and focus on growing the business without the constant fear of personal financial loss. Tax benefits are another key advantage. Limited companies pay corporation tax, which can be lower than personal income tax rates. As a director, you can also take a portion of your earnings as dividends, which again can be taxed lower than your actual salary. This setup can save a significant amount in taxes, especially as your profit grows. It's a more strategic approach to managing your finances, allowing you to reinvest savings back into the business. Credibility is another advantage. Adding limited to your company name can signal professionalism and stability. Clients, suppliers, and even potential investors often perceive limited companies as more professional and reliable. This enhanced reputation can make it easier to secure contracts, negotiate better deals, or attract new customers. For many entrepreneurs, this credibility is worth the added responsibility of running a limited company. Raising capital is also simpler with a limited company. You have the option to sell shares, bringing in investors who can provide the funds needed to expand, whether it's buying new equipment, hiring new staff, or launching new services. The ability to raise money can be a game changer for ambitious businesses. It's a structure that supports scalability and long-term growth. Lastly, limited companies benefit from continuity. Unlike sole traders, where the business ends if the owner steps away, a limited company can continue under new management or ownership. This makes it a great option if you're thinking of building a legacy or selling the business in the future. On the other hand, there are some disadvantages that are important to consider. For starters, the setup process is more complex when comparing to registering as a sole trader. You need to register your company's house, draft articles of association, and set up systems to comply with legal requirements. This can feel overwhelming, especially for first-time entrepreneurs, and can often require professional help, which adds to the cost of starting up. Running a limited company also involves administrative responsibilities. You'll need to file annual accounts, maintain detailed financial records, and submit confirmation statements to Companies House. Missing deadlines or failing to meet these obligations can lead to fines or penalties. For someone new to running a business, managing these tasks can be a steep learning curve. Another downside is the public disclosure. As a limited company, financial details like your annual accounts must be made available to the public. This transparency might not fit well with business owners who prefer to keep their financial information private, but it's a trade-off that comes with the added credibility of being a limited company. Profit distribution is also more structured. Unlike sole traders who can take out their profit more freely, limited companies must distribute distribute profits through salaries or dividends. While this can be tax efficient, it also means less flexibility on how you access your earnings. Planning becomes essential to avoid unexpected tax bills. There are also additional costs to consider. Accountants, legal advisors, compliance software may be necessary to manage the legal obligations and financial obligations of a limited company. For smaller businesses, these costs can quickly add up, eating into profits and resources. Despite these challenges, many entrepreneurs find the benefits of starting a limited company outweigh the negatives, but it is a decision that requires careful planning to ensure that it aligns with your business goals. For many entrepreneurs, starting as a sole trader is a natural first step, but as the business grows, transitioning into a limited company often becomes the next logical move. Why? Because the needs of a small personal operation are different from those of a larger, more established business. One key reason for making the switch is financial. As your income increases, the tax benefits of a limited company become more attractive. Paying corporation tax on profits and enjoying a mix of salary and dividends can be much more efficient than paying high rates of personal income tax. This shift can save you significant money in the long run, leaving more resources to invest in your business. Liability is another big factor. Whilst unlimited liability might feel manageable at the start, it becomes riskier as your business takes on more responsibilities. Transitioning to a limited company would then protect your personal assets, providing you peace of mind as you scale up. And as I've already gone over, transitioning to a limited company can also help your perception with clients and investors. Fortunately, the transition process isn't as daunting as it sounds. You'll simply need to register with Companies House, set up a bank account, and inform HMRC of the change. It's also essential to transfer any business assets, contracts, or intellectual property from your sole trader status to the limited company. With proper planning, the transition can be smooth and worth the effort. Transitioning isn't mandatory, of course. Many businesses remain sole traders for their entire lifespan, but for those eyeing expansion, the switch to a limited company can unlock new opportunities and secure a stronger foundation for the future. So what's the right choice? It really depends on where you see your business going. If you're starting small and want simplicity, then being a sole trader might be the right way to go. It's flexible, easy to manage, and great for testing out a new business idea. But if you're aiming for growth, want added protection, or need that professional edge, a limited company could be the better option. Yes, it's more work, but the benefits, tax savings, credibility, and limited liability might make it worth it. At the end of the day, there's no one-size-fits-all answer. The best choice depends on your goals, how much risk you're comfortable with, and how you plan to grow your business. So I hope this video has helped you to make a better and more informed decision. If it has, do please hit that like button, and don't forget to subscribe for more support in running your business. If you do have any questions, feel free to drop them in the comment section. I'd love to hear from you. On the screen now are 2 videos that YouTube thinks you'll find useful, but finally I want to thank you for watching, encourage you to continue on your business journey, and wish you the best of luck. God bless.